Today we're going to talk about gold prices, a complaint from one of you, and a bunch of financial headlines. For many of you, it's your first time here. My name is Peter Leeds. Nothing we say is intended as personalized trading advice. Along with my entire team, we publish the world-famous Stock Pick newsletter, which we've been doing for over 25 years now. And gold prices have broken $2,000 an ounce. Right now they're at $2,027. But I'll reiterate that this is the beginning of a move, not the end of a move. There will be dropbacks. The price of gold might drop back below $2,000 an ounce again, but it will continually produce higher lows and higher highs as gold demand continues to rise worldwide. And even just the understanding of what gold is and how it operates and how it's going to help people protect their assets during a time of economic chaos, that's all going to be a wind in the sails for gold. When gold prices dropped, people were understandably worried, and you get the same comments each time, but every time I tell you, just wait. Gold is not going anywhere. So let's get to some of these headlines. Inflation's inventory gluts are here to stay and will hit the bottom line in a weaker economy. A little over one quarter, or 27%, say companies are selling excess inventory on the secondary market because high storage prices are hitting the bottom line, with impacts to materialize in the upcoming quarterly results. We've been talking about inventory gluts for a while, and I told you they'd have big retailer inventory gluts. There'll be automobile gluts, and then you're going to benefit as a consumer. It's going to drive prices lower because there's going to be door crasher specials. They're trying to get rid of inventory. There's going to be liquidation sales. And the companies which are forced to liquidate their inventory are going to be suffering on the revenue side of their business, on the earnings sides of their business as well. And this will take quite a long time to work through. An inventory, especially if it's decaying, so to speak, if it's food, for example, and it's going bad, or it's a fad that's falling out of favor, that kind of inventory is a liability to the company. It's costing them money to keep the storage space for it. It's costing them money because they're selling it for less to try and get rid of it, and then they're not selling their other products for greater prices because they're getting rid of this other inventory. Inventory gluts are good for the consumer, bad for the economy, and it's going to have an impact on the companies in the economy coming up, just as it says in this article, in the upcoming quarterly results. As expectations rise that Wall Street will revise earnings estimates lower in a weaker economy, almost half of those surveyed said the biggest inflationary pressures they are paying are warehouse costs, followed by rent and labor. And many are continuing to pass those costs on to consumers. Private payrolls rose by 145,000 in March, well below expectations. Private sector hiring rose by just 145,000 in March, down from 261,000 in February, and below the estimate of 210,000. Financial activities lost 51,000 jobs, and professional and business services fell by 46,000. So where were the jobs? If that's where the jobs were lost, it was all gained in leisure and hospitality, which added another 98,000 workers. Trade, transportation, and utilities grew by 56,000, and construction rose by 53,000. And this next headline kind of goes together with the last headline. Job openings tumbled below 10 million in February for the first time in nearly 2 years. Available positions totaled 9.93 million, a drop of 632,000 from January's downwardly revised number, according to the Labor Department's JOLTS report. It was the first time vacancies fell below 10 million since May 2021. Professional and business services saw a slide of 278,000 job openings on the month to lead decliners. Did you guys get a feel there for how quickly this can happen? How quickly they can lose hundreds of thousands of jobs from one month to the next. Once it starts to go, it can go pretty quickly. This is a comment we got on YouTube from one of your viewers. This is from Marty McDonald. So, how do you feel about Yangaroo stock now? It's low in price, and I bought it way higher on your suggestion. Am I just a new investor without a stop loss? On your suggestion that another company would be interested in buying it in hopes it will go up. So far, not impressed with your outlook. Thanks, Marty. Fair comments, actually, even if they were a little bit catty. I think you're trying to slap me on the wrist or something. Yangaroo had all of the pieces in place to become an incredibly successful company and stock. It's the most frustrating and maddening stock I've ever been involved with. And if you lost a few bucks, maybe it'll make you feel better to know that I lost a lot more than that so far. My ex-wife, my father, his business partner, my psychiatrist, my doctor, my accountant, a lot of friends and family, and a lot of viewers on YouTube like yourself. This is a company I've been watching and involved with for over 4 CEOs now, back when they were going by a different name. And what I told the first 3 CEOs was that the problem with the company is a branding problem. They're not able to brand their technology properly. And most recently, for the first time, it seems like they're starting to understand what I've been saying this whole time. And I do believe that this company will do pretty well, but so far they've done nothing but disappoint me and prove that they're unable to execute on the network that they've established. Now that they're changing the branding back to what I've been talking about for probably over 85 decades now, and they're doing the branding much more appropriately, much more simply, much more powerfully, that will result in a big jump in their business. It gets rid of the frictional factor of not understanding how their technology works or what it does. Now they're telling you what they do in a matter of a couple of words. From the confusing and technical language they used to use, you can see on their website now, Digital Media Delivery Plus. That will be the first step in really helping this brand build a bigger footprint. And when they do that, the revenues will come in greater and more consistently. In a small company like this, it won't take a lot for them to turn things around and get really rolling. But Marty, this happens sometimes. I even made a video in my Investment Wisdom series talking about this exact problem. People are just saying, on your suggestion. Well, what did you do to figure out how to invest well? You followed some guy on YouTube you didn't even pay a penny for, you just watched a YouTube video and then acted on it? What did you do on your end for due diligence? Because I know what my risk tolerance level is. I know what my knowledge level is. And my expectation was for the share price to climb. It went the other way. It was wrong. I was incorrect. And just you mentioned in your comment about stop loss, should you have a stop loss, it won't work on a thinly traded stock like Yangaroo. Thanks guys, we love you. We're back in the studio, so we're going to keep these videos rolling out pretty good now. And if you haven't done it yet, think about subscribing to this channel so you can see our next video when it comes out, which we're already working on right now.